Ladies and gentlemen, Donald Trump is warning we're heading to something far, far worse than a recession. He's warning that we're going to have a huge economic transition and the economy will never be the same. We are also getting bad economic report after report. As I'm recording this right now, the pre-market is saying there could be big selling happening on Monday. Bitcoin is tanking, and we've got new indicators that I believe we could not be heading for a recession, but a depression. So everyone, we've got so much to cover in today's video, but don't just take my word from it. I'm going to show you the news, the facts, and the data to show you why things are not looking good and how we can protect ourselves. So everybody, let's get right into it. Well, okay, first things first is this, everyone. It's looking like it's shaping up to be another big bloody day in the stock market starting Monday. So stock futures are falling, and we're seeing some of the worst stock sell-offs since September last year. Now, a lot of this has been triggered with the tariff wars between Donald Trump, Canada, Mexico, but more importantly, China. And in an interview that aired Sunday, President Donald Trump responded to a question on Fox News about the possibility of a recession. He responded by saying the economy was going through a period of transition. aka we're going to have a very tough transition going ahead, because the only thing that's been holding up the government, not just in the US but around the world, is massive government spending. But governments around the world are so indebted right now, a lot of investors don't want to buy these government bonds, aka this government debt, because they're worried they won't be able to repay it back. And so this is leaving governments with no choice but to stop spending when their debt is so high, because if they don't, we'll see like what happened in the UK with Liz Truss when they announced all this spending. Investors were saying, look, we don't believe you could possibly repay back all this debt. And they started to sell off bonds, and a lot of pension funds held these bonds, and the pension funds nearly got margin called. Also, they go on to report that consumers are very, very worried with inflation. A lot of central banks have said inflation is over, but the consumers don't believe them. I'm still seeing prices go up absolutely out of control. I think inflation is actually getting worse the past few months than even during 2022 and 2023. Every single time I go to buy some food or go to the grocery store or just simply want to buy anything, it seems like prices are up 10 to 20% each month. And we're about to get much, much more data coming this week. And as I'm recording this live right now, Bitcoin has fallen to below 81,000. We can see it did hit a low here of 80,300. Now, the reason why I look at Bitcoin, I do believe in it long term, even though it's down from around 105, 110,000, 80,000, it's still well up over the past 5 years. This is a good sentiment indicator. If people are worried, they will sell off risk assets, and Bitcoin is a risk on asset. And we're going to see a lot of the tech stocks begin to sell off too. And what this will lead to is a lot of people may be worried about the economy. They'll stop spending, and that will create a self-fulfilling prophecy with more bad economic news. But people, what's even worse than this is what's happening in the jobs market. And you know what they say, when your neighbor loses your job, that's a recession. When you lose your job, that's a depression. We just got news that there is mass layoffs coming very, very soon. So look at this, everyone. Layoff announcements soar to the highest since 2020 as Doge slashes federal staff. So while they're doing this with government jobs, it's not just government jobs. It's happening in the private sector. And these government jobs are going to lead to a lot of these people that were going to spend in businesses, in restaurants, in cafes, on clothing. They're not going to have any money to spend. And so those businesses that were going to have these federal employees spend, well, they're going to have to start announcing layoffs as well. But this is just how bad it was, everyone. Look at this. So around 172,000 layoffs was announced for February. That's up 245% from January, and the highest monthly count since July 2020. That's right, this is the highest since July 2020, but what happened in July 2020? They completely shut down the global economy. So that was an artificial economic crash, but there's no artificial global lockdown happening right now. This is just simply happening from the real economy really suffering by people having absolutely no money to spend. So more than 1/3 of the total came from billionaires entrepreneur Elon Musk's effort to reduce the federal headcount and put a total of announced federal job cuts at 62,000. So a lot of these people are saying this is only government jobs that are being laid off, or only government employees being laid off. No, 110,000 private jobs were lost. But that's not all. What I've been warning about why this recession could become a depression, because GDP now, the live tracker, is getting worse every single week. So we had this report here of the first quarter is on track for negative GDP growth, Atlanta Fed indicator says. Now, when they first released this, they were saying it was only going to be reduced by 1.5%, but I just went and checked it as of today, and they're now saying as of March 3rd, the GDP growth for the first quarter is going to be negative 2.8%. This is absolutely massive, everyone. You may think 2.8%, that doesn't sound like a lot. For GDP, every single percentage point is hundreds of thousands of jobs lost. And if this continues to worsen, which I think it will, with more tariffs being announced, with a lot of geopolitical uncertainty between the US, Russia, Ukraine, with trade wars with the two biggest economies in the world, it's only going to get worse. And what this is going to lead to is the tech stocks that caused all the gains in the stock market. Because remember, a lot of the stocks in the S&P 500 actually haven't gone up that much. It's just the Magnificent Seven, the tech stocks, the Nvidia stocks that have soared, that have lifted the indexes. Well, they're about to crash, and that will bring the whole indexes down. But there still is a lot of value out there. It's just that these indexes are now heavily weighted to the top 10 stocks, and they're creating a monopoly over the S&P 500 and the NASDAQ. So look at this, everyone. The US markets are trailing the world as the aura of America first begins to fade. So we can see here with this chart, the US benchmark slides as global markets rally. We can see the S&P 500 is down 1.9% year to date, but that's only going to worsen. Europe 600 stocks is up 9%, and the Hang Seng is up 20%. And so a lot of people are seeing that the US stock market is severely overvalued. There is some more value in other places around the world, and they're simply taking their profits when they know that the real economy is about to tank. Not only that, but the dollar is fading. The world's primary reserve currency is now almost 4% below the post-election peak it reached in January, and the slide accelerated last week, pushing the Bloomberg Dollar Spot Index to its lowest since early November. So people are very, very worried about the fiscal sustainability of the US government with its massive debt, and they're starting to sell the dollar, and we'll have to see if this continues to go on. But like I was talking about earlier, the biggest risk is if the US, the #1 economy, goes into a trade war with the second biggest economy in the world, China. And China is already facing huge issues. I broke the story a couple of years ago, or a few years ago, about how Evergrande is going to cause a housing collapse in China. That definitely did happen, even though they're trying to hide it. Trillions of dollars of wealth have been lost in China. And we just got this new report that their inflation is negative because they have deflation in China. So don't believe all these reports that are coming out of China that they've got 5% GDP growth. The data, other data is conflicting that message and showing that things really aren't always cracked up to be in China. So look at this, everyone. China's consumer inflation turned negative for the first time in 13 months. So China's National Consumer Price Index in February fell in negative territory for the first time since January last year, according to data published Sunday by the National Bureau of Statistics. It comes as investors continue to look for signs that Beijing stimulus measures can help to boost the country's struggling economic recovery. So everyone, I know what you're thinking, well, okay, what does all this economic jargon mean in simple terms? What this simply means is the government has been doing all the heavy lifting. It's just been government spending that has created this economic growth, but that is unsustainable. Governments now can no longer spend, so we're going to see a huge contraction. More layoffs are going to be announced. Stocks have been severely overvalued, and central banks are not going to be able to cut interest rates as quick as they wanted because inflation is still high. So we're going to see, I think, a big correction in the stock market, maybe 20 to 30%, and we're going to have an official recession this year in the US. So I know that sounds like all doom and gloom and it sounds pretty bad, but what can we actually do to protect our wealth? Well, what have I been talking about again and again? I've been consistent, everyone. I haven't changed. I've been saying gold is going to protect you during an economic downturn, and also with so much geopolitical risks, with trade wars between the US and China, and also risks of war, like what's happening with Ukraine and Russia, with that situation continuing to escalate. And as I'm recording this right now, gold is around $2,920 an ounce and is getting very, very close to $3,000 per ounce. It's hit all-time highs in the US dollar, the Australian dollar, the Canadian dollar, the euro, and the British pound. But what I've also been talking about, and also Peter Schiff was speaking about this in his latest podcast, is gold has taken off, but a lot of these gold mining companies or the gold mining indexes are severely lagged. Because look at this. This is the GLDG index, the VanEck Junior Gold Miners ETF. And gold hit an all-time high of around $1,900 per ounce in December 2010 or 2011. We can see here the GLDG is down around 68% from its all-time high. So that shows me it's severely undervalued right now. But we have Donald Trump in office, who is going to be more friendly to gold miners than the Biden administration. And that's why I want to talk about today's video sponsor, Gold Mining Inc. That's stock ticker symbol GLDG. And it's trading within a few cents from its 5-year low during the pending of March 2020. And as of March 9th, Gold Mining Inc. has a market cap of approximately 163 million USD with no debt and approximately 130 million USD in cash and equity holdings. And Gold Mining Inc. owns 80% of USGO and just over 12% of GROY. Now, as of recording this again of March 9th, the 9.9 million shares of USGO are worth approximately 90 million USD, and the 21.5 million shares of GROY are worth approximately 29.8 million USD. They have cash of 11 million USD, which gives us a total of around 130 million USD worth of cash equivalent or equity assets. Yet when the company originally acquired their dozen gold projects, the peak combined market caps of companies that held them was approximately 850 million Canadian, which during the period of 2010 to 2018 was much closer to par with USD than today. Now, the combined peak market cap was calculated based on each respective company's peak share price during the period prior to the acquisition. So again, peak market cap of companies acquired, 850 million Canadian in 2010 to 2012. The current market cap of Gold Mining Inc. is approximately 163 million in 2025, and the gold spot price was $1,925 in 2011 and is $2,920 as I'm recording this in 2025. Now, Gold Mining Inc. stock is trading around 82 cents right now, which is near its 5-year lows. And in August 2020, Gold Mining Inc. Hit a share price of $2.72 a share when gold first reached the $2,000 per ounce mark, yet the stock is now 68% lower. Now, the peak market caps were calculated based on each respective company's peak share price during the period prior to the acquisition. The value proposition is intriguing today as a stock price of 82 cents per share is set out above, and once I account for Gold Mining Inc.'s cash and publicly traded stock portfolio, companies' dozen gold properties aggregating 12.5 million ounces of gold equivalent estimated mineral resources in the measured and indicated category, an additional 9.7 million ounces of gold equivalent estimated mineral resources in the inferred category are valued for only 10 million approximately USD, and you can see the company's websites for details of individual resource estimates and particulars of underlying technical reports. So there is a gap between its market price and asset portfolio, and this is how I look at the situation. Gold is trading at all-time highs while Gold Mining Inc. is near its COVID-19 lows. On top of that, a shareholder of Gold Mining Inc. is gaining additional exposure to a portfolio of gold projects containing an estimated mineral resources of 12.5 million gold equivalent ounces, an additional 9.7 million inferred value at only 10 million USD. Again, it is down approximately 68% from its all-time high, so this is an attractive opportunity worthy looking into in my opinion. In my view, this management team consists of industry veterans with decades of experience in the industry, and that speaks for itself. Because Amir Adani, the co-chairman and founder of Gold Mining Inc., along with the president, CEO, and founder of Uranium Energy Corp, He advanced the company from the concept to US production in its first 5 years and is now one of the largest Australian companies in the public markets. And David Garofalo, co-chairman and director, before joining GLDG and GROY, David served as president and CEO of Goldcorp Inc. until its new sale to Newmount Corporation in April 2019. So he was named Person of the Year by the Northern Miner in 2020 and Canadian CFO of the Year by Financial Executives International Canada in 2009. So go ahead and start doing your own research on Gold Mining Inc. That's stock ticker symbol GLDG. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.